From DailyForex, this is Chris taking a look at the dollar against the Canadian dollar. The US dollar initially tried to rally a bit during the early hours on Tuesday, only to collapse a bit against the Canadian dollar. That being said, we are very much still in a consolidation phase, so I'm not overly pressed about this. And I think we continue to see more buy on the dip behavior, but it is a bit of a grind. This does make a certain amount of sense considering that the two economies are so heavily intertwined. Anybody who's ever been to either the Peace Bridge or the Ambassador Bridge between the two countries can see just how much trade there really is. It's actually kind of an impressive sight. With that being the case, you don't get massive swings very often, unless, of course, somebody is caught offside. As things stand right now, crude oil is rallying a bit, but quite frankly, I don't think that is going to be a major driver of this pair anytime soon. Keep in mind that the Americans produce a lot of crude oil now, so although it can help the Canadian dollar, it doesn't necessarily translate the same way against the greenback. The 50-day EMA underneath continues to be a technical support level right along with the 200-day EMA, so I do think it's probably only a matter of time before buyers would show up in that general vicinity, and it would continue the overall uptrending channel that we've been in for a while. The 1.3625 level is still an area that I'm paying close attention to, because if we can close above there on a daily chart, I think then you have a real shot at going to the 1.38 level. The CPI numbers coming out on Wednesday could have a lot to say as to what happens in this pair next, but keep in mind, it just tends to grind more than anything else, so you're not looking for massive moves most of the time.